Hi, my name is Phillips, Chartered Financial Planner, and today I'm going to run through an example of our IHT calculator. I'll run through it on the software so you can see step by step how to use the calculator. Like any of the cash cal tools, you'll need to select the client you wish to use the calculator for, and once within the client dashboard, click on the planning tools and select the inheritance tax calculator. Today we're going to input a case live to show you the inputs and explain the results, and have pre-populated some of the information in readiness. If we start on our assumptions page, we can see the client's current age and the assumed age at death. In this case, we've assumed the clients are currently 50 years old and will live for a further 10 years. If the client has a previously deceased spouse, this can be entered as they may benefit from the nil rate band and the residence nil rate band. We can then also set whether client 1 has a spouse or partner and the order of assumed death. Once you're happy with the assumptions, you can then move on to the asset section. Each asset that we've entered will have a few important details which you can review. If we click into each asset using the edit button, you can view these details. Going top to bottom, we can see the general investment account first of all, and can see that this category of the asset is a cash stroke investment. If we click the category, we can view the various categories that are available as an asset option, and the specific category will change what the planning options are available. So it's important to ensure that this is correct. If the asset that you're importing doesn't fall into the categories provided, simply input it as a cash stroke investment, as this will have the widest variety of planning options. In this instance, we can see that the general investment account has already had some planning in place. It was gifted into trust in the 2019-20 tax year, which is therefore a chargeable lifetime transfer, or CLT. This asset is owned in single names and has a 2% net investment return rate. If we then look into the rest of our assets, there are two ISAs with a value of £120,000 each. At present, they're to be left the residual estate. However, we have suggested that they invest these assets into BPR qualifying investments, giving 100% IHT relief once held for 2 years. As this will be put in place of the 2021-22 tax year, it will need to be held for 2 years before the relief is applicable. Client 1 also has a personal pension of £500,000, and this is left in the pension wrapper, and therefore no IHT is to be considered under current legislation. Finally, we have a main residence valued at 1.5 million, which is jointly owned 50-50 between the two clients. At present, this will be left the residual estate, but we've suggested that it be left to direct descendants, meaning that the residence nil rate band will be utilised. If we look at our liabilities, there's also a mortgage which is linked to the main residence and will be repaid over 15 years with a 2.19% interest rate. If you had a client withdrawing funds from an investment or asset and wanted to include these withdrawals in the forecast for future IHT planning, you can estimate the amount withdrawn over the forecast period and add that in as a liability. Now, it's important to note that when you change the date of death, that you would also need to adjust that liability to account for the withdrawals over that period. Moving on to the IHT position tab, we're able to see the results both before advice and after advice in order to show the impact of the planning suggested on death in 2031. Looking before the advice and working our way down, we can see that the gross asset value for client 1, including growth over the last 10 years. We can also see the value outside of the estate, which includes the personal pension and the general investment account, which was gifted into trust in 2019-20 tax year. We can then see the net estate and how much of that is exempt from IHT on first death, as it will all be passed through the spousal exemption. There is therefore no IHT payable on first death. On second death, we can review the same information and look at the gross assets, liabilities, and value outside of the estate. Here you can see the net estate on second death is £2,027,604.51. After both uses of the nil rate band of 325,000, the remaining estate is liable to IHT of £551,041. The residence nil rate band cannot be used in the first instance, as this is prior to the advice to leave the property to direct descendants. If we then click on the After Advice tab, we can see that the IHT to pay has vastly reduced for this reason. This will be mainly due to the ISAs now gaining 100% IHT relief through the investment into BPR qualifying assets, and the fact that the residence nil rate band will also now be utilised. As the net estate is over 2 million, we can see by hovering over the residence nil rate band use tab that the residence nil rate band has been tapered down slightly, and that the results of that are shown clearly. Here, the total IHT payable is now £299,539.24, and the Asset Breakdown tab also allows you to look at what happens to specific assets throughout the forecast in isolation, and of course, as with all our tools, you can create the client-friendly report through using the Create Report tab at the bottom.